Okay, welcome back to another Coaches Mailbag video, CoachTTackleTrading.com, and I got a good question from Tasha in our clubhouse. And by the way, if you ever want to get a question answered, the clubhouse is a great place to post them. I check everything in there, to make sure that we're getting good engagement in our community and helping you guys out and whatnot, and I really like it. Tasha says on XLRE, she's got an example here about selling short. And I want to read the question first. So this is a question from a beginner on a pretty basic elementary part of buying and selling stocks. Here I'm trying to do a short sell of XLRE, meaning my goal, as far as I know, to profit off the market going down by selling shares I don't own and then buying shares at a lower price, profiting off the difference. First off, before you get to the rest of the question, that's exactly what you short sell for, okay? So Tasha, great understanding of that. When you sell something short, you want it to go down, and then you will have a profit off of the difference in the position. XLRE in this example is clearly dropping. Red candle, red candle, red candle, red candle. We'll go look at the chart here in just a second, and then we'll also identify what you've done with your orders. Make sure you've built them correctly, or at least with some logic behind them as well. But you've got that understanding correctly. So do I sell at market order to sell? Borrow the shares, I'm assuming, at the next available price when the market opens. Not usually. You can do it that way. It will give you a fill, but it's not the best way to do it, and I'll explain why right now. If I bring up, let me think here, chart. Actually, why don't we do this right here? And XLRE, ding, 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 ding. Look at that chart. Beautiful downtrend, developing downtrend, even better probably than when you took the screenshot. In one regard, it's had a little bit of a bear retracement. So it could be a good candidate for a short sell. Now, you're going to have some rule designs behind how you do this, usually if in trading systems, so that'd be something I would recommend. This location right here would be what we'd call a trigger, okay? And the reason you do it that way, Tasha, is because it's the low of the current candlestick. A very basic rule is to take the ATR rate, which is 0.42, take 10% of that, which would be 4 or 5 cents. 4 cents would be the exact number, 0.04, and then take that below the low of the day. Now, when you're selling short, you can do it right from a chart. If you're a Thinkorswim user, right-click and sell will create an order. Now, this dialog will do it at whatever your defaulted order window is. May not be what you want to use. That's okay. Now, if you get to that dialog, right-click and sell, and you're like, okay, that's not what I want, you can always edit it and get the order window right here, okay? And that's where you'd put in your quantity, your different order types, do some adjustments and some changes and things like that. Now, before we go beyond into the targeting and all that kind of thing, Tasha, let me change this to market. The problem with a market order is we don't know what the price will be tomorrow. What if it goes up? You're going to sell short if it goes up, right? If it goes down, you don't know what price you're going to get. If it gaps down, especially after hours, you have no control over a market price, which is the concern. So what I would generally train somebody to do, and what I'm going to give you the direction on right now, is to learn how to trigger into that trade with a stop or a stop limit. And we'll go through both of them. A stop, by definition, I'm going to set the time in force at good till canceled. What a stop loss will do is turn into a market order when the line is reached, all right? Now, the low of today, let me put on the data mode floating. The low of today is 32.01. 32.01 minus 4 cents would be 31.97. So if I put in my stop loss at 31.97, I'm following my rule. I'm taking 10% of the ATR below the low of the day and creating what's called a trigger confirmation point. And the logic behind that, Tasha, is that you're only going to get in if it goes in your direction. You identified XLRE very well, by the way. It's in a downtrend. It then had, and I'll even try to color code these. That did not work. We've got to click green here. It then had a green candle and another green candle with a low tail right here. Now, we don't want to get in if it goes back up tomorrow. Think about that. You want to get in on confirmation of momentum. And so we're creating an order that will only get in if that tripwire is met. Okay. And that's where a stop order comes in. And the way that we did that rule, and write this down, we took 10% of the ATR below the low of the candle. That's our trigger. And let me even put the word trigger. Trigger equals 10% of the low of the ATR below the candlestick. So there we are with that. And that way we're only going to get in if it does indeed drop down. Now, let's go back to your question for a minute and kind of think through this. Let me catch where it was. So you've got an understanding there. We don't really want to use a market order. You can use a stop limit, but for a beginner, let's leave that for another video or training, okay? So right now, learn how to use the stop. The stop limit is better in my opinion, but it adds a layer of complexity where you've got to set the limit window. By the way, all you do, now I've talked myself into showing it to you. That's all right. Stop limit, and then you set the limit window at like 31.87 or something like that. And then that creates a window for your fill instead of a specific price point. So, but stop entry order is fine here first. Let's go back to your dialogue. And it says, second, I'll buy if it continues downward, profiting on the difference, buying with a stop limit order at 31. You don't have to do it that way. You can do a lot of different ways, but let's say that you want to get out at 31 as a target, because every trade kind of has entry, stop, and target. Well, when you're doing this order here, you can either adjust it where you add the first trigger's OCO this way and then add those buybacks after the fact, okay? And that's where you'll have a red, a green, and a green. Now, don't worry about the mechanics yet. Red, green, green will have the entry, target, stop orders available for you. Now, let me delete and start over, though, because I'll show you what you can do if you learn how to do this from a chart. Right-click, sell custom with an OCO bracket. Change the first one to a stop. Good till canceled. I think we had, and I got to double check, low of the day 31.97 was our trigger. You want to buy back at 31, just a limit price. You don't need a stop limit on your target, okay? So just use a limit price. That way, if it goes down to 31 here, you'll have your target price. Now, the third component would be a stop loss. And then, let's see, and just a buy limit. So the second part of your question, buy limit's better for the target, in my estimation. Does my order entry look right? Is there a better strategy? Also confused about the bottommost column in the order entry section, the 31 stop STD order. What is the STD? That's standard, I believe. That's what they mean. I'll go look at your order here in a second as well. Is there a resource within tackle trading that can improve my understanding? Yeah, the live shows. Go to the coach's show, go to the coach's lounge and ask the question. The best way, especially when there's nuances to a question like this, and there's other resources I'll show you, but one of the best things you can do is show up to one of the live webinars, okay? And you got a order or notification that the ETF's not available to borrow. I'll go see if that's true on my side as well. So we'll confirm, and I'll give you a couple other ideas. Let's look at your picture. Now, what you did, it's interesting. You had an entry and then a stop limit at the same price, or an entry and then a target down here, or an entry and then a stop down here. Out of the three different orders, the one that would make sense is number 2, but you don't, but even then I would do it differently, okay? And why don't we do this? Why don't we use this little diagram I'm drawing, and we'll create a little checklist cheat sheet for you. So your entry, your E, is going to be a sell stop order. Your S, which is your stop loss, is going to be a buy stop order. And then your T, which is your target, is going to be a buy limit order. Now that should be the sequence of how you do each of the orders. In the visual dialogue on the order form, sell stop, buy target, and let me do the high of the day here was 32.37, add another 4 cents, 32.41. So what I just did is I went to the high of the candle, and you'll notice that this dialog box I'm moving, whenever you put your mouse on the candle, it will say the high. The high was 32.37. 10% of the ATR is another 4 cents. Add that to the high, that's 32.41. So now I've entered my stop loss, my target, and my entry, ETS, okay? Now in the visual description, it's SCT here. Stop, entry, target. That's where your physical location would be on your trade. But this is a little bit better way to do it. C'est la vie. Good question. I'm glad you did. Now here's the kicker. After I make everything good till canceled, a couple of bits and tips I would give you. Click these little gear buttons and read this paragraph. Read it out loud. Actually go in there and say, okay, I'm going to read this, and you know, when a trade occurs at or below 31.97, this order will show a working status until it is filled or canceled, so on and so forth. Now, by reading them, you're going to get an idea of how you've submitted the order, okay? It will explain it to you the best it can based on what it is you've put in there, and then you can get an idea of how it is you've built it, whether or not there's some logic to it. All orders should be good till canceled. Stop, limit, stop. If you're doing a first triggers OCO, will allow you to have all three components in a trade, which is stop, entry, target. Now, if I click here, it's very possible that when I click send, it will give me that thing that it sent you. This order is not available to borrow. They won't let you borrow it unless you called the broker. Sometimes when they're limited on stock, that can happen. And we're not going to go down the rabbit hole on this, but here's what you would do. You would find an alternative ETF that represents the same thing. See, XLRE is the real estate sector, and maybe IYR is the same chart, same kind of product. It might be available to borrow. So you find another product that's kind of the same thing. There's a lot of very similar products in the market. Or if you stay with XLRE, say you can't find something liquid or whatever it is, you learn how to trade this put option right here. And let me get XLRE. See, this February 60 delta put right there is also pretty good. Okay, so you could do it either way. Either find a different company, find a different stock, call the broker. By the way, if it was a live trade and you really wanted to make it, you'd call your broker live. Because sometimes they have the computer system give you the dialogue saying, hey, you can't do it, when maybe they just got to make a few phone calls, or maybe there's limited shares or whatever it is. I've found in paper trading, sometimes you get that message where you could probably execute it live. But I think even better for almost anybody long-term is learn how to use the leverage in the option contract as well. All right, Tasha, good question from the clubhouse. Hopefully we helped you out there. CoachTTackleTrading.com, and get in the game.